Greetings and welcome to the EDR Incorporated Third Quarter 2014 Earnings Conference Call. At this time, all participants are in a listen-only mode. A brief question-and-answer session will follow the formal presentation. If anyone should require operator assistance during the conference, please press star zero on your telephone keypad. As a reminder, this conference is being recorded. I would now like to turn the conference over to your host, Brad Cohen of ICR. Thank you, Mr. Cohen. You may begin.
Thank you. Good morning. During today's call, management may make forward-looking statements. These statements are based upon current views and expectations. Such statements are subject to risks and uncertainties and other factors that could cause the actual results to differ materially from future results. Risk factors relating to the company's results and management statements are detailed in the company's annual report on Form 10-K and other filings with the Securities and Exchange Commission. Forward-looking statements refer only to expectations as of the date on which they are made. EDR assumes no obligation to update or revise such statements as a result of new information, future developments, or otherwise. It is now my pleasure to turn the call over to Mr. Randy Church, President and Chief Executive Officer. Randy?
Good morning, everyone. Thank you for joining us for the EDR Third Quarter 2014 Earnings Call. For today's call, I'll make a few brief comments. Chris Richards, our Chief Operating Officer, will review property performance in fall 2014 leasing. Tom Trivian, our Chief Investment Officer, will discuss acquisition, disposition, and development activity. And Bill Brewer, our Chief Financial Officer, will review the quarter's performance. I'm glad to report that our business has performed well during the year. Third quarter and year-to-date core FFO per share increased 38% and 21% respectively, due to the successful execution of our internal and external growth plans. Fall 2014 leasing finished strong with a 4% increase in same-community revenue. Over the 5 annual leasing cycles since Chris Richards and her team took over, EDR has produced market-leading increases in annual same-community revenues, averaging 4.3%. Furthermore, last month at the NMHC Student Housing Conference, participants overwhelmingly reported a good year in same-community revenue growth. And last week, American Campus reported same-community occupancy of 97.5% with a solid increase in net rate. Given these data points and the reduction in new supply forecasted for 2015, we are confident that this type of organic growth will continue in the years ahead. In addition to this internal growth, we successfully delivered $304 million of owned developments in the third quarter. Importantly, at cost, 86% of these 2014 development deliveries are either on or pedestrian to campus. These developments are at well-known Tier 1 schools such as the Universities of Kentucky, Colorado, Connecticut, Minnesota, and Georgia. The leasing of these new developments was in line with our underwriting expectations. In addition, we purchased a $90 million adjacent-to-campus asset at Arizona State University, which is 100% leased for this academic year. In aggregate, these 2014 acquisitions and developments increased gross assets by 25%. Lastly, we have announced an aggregate $292 million of development deliveries for 2015 and 16, which will further increase gross assets by 15%. And has been pre-funded through our appropriately capitalized balance sheet. This embedded growth is among the highest as a percentage of total enterprise value of any REIT. These new assets will continue to drive shareholder value while also solidifying our best-in-class portfolio. Next, new student housing supply. Recently, Axiometrics published a forecast predicting that 2015 new student housing supply will decrease about 25%. As shown in our earnings supplemental, new supply growth in our markets is expected to slow by 5% for the 2015 leasing cycle. I've not yet investigated the discrepancy between the two numbers, but the reduction in new supply is real and noticeable. New supply is still slightly outpacing projected enrollment growth, but as we experienced in the last 2 leasing cycles, when new supply as a percentage of enrollment was even higher, this new supply is being absorbed by the modernization taking place in the industry. Remember, approximately 50% of housing servicing university markets in which we have assets are non-purpose-built student housing accommodations, typically older duplexes, passive single-family homes, and the like. The robust same-community revenue increases we produced in the last two leasing cycles, in the face of a small excess amount of supply over enrollment, are attributed to our best-in-class portfolio of assets, outstanding property operations teams and systems, and the ongoing modernization of student housing taking place across the country. This provides a great environment for our business. And last, our competitive advantages for on-campus developments under the One Plan. For EDR, this is the most exciting growth opportunity. By the end of 2016, our portfolio of One Plan assets will be over $500 million at cost, with more to come. Currently, we are engaged in 13 active RFPs for on-campus housing, a new high. While it is impossible to predict the timing or final outcome of these RFPs, we are more convinced than ever that this area of investing will continue to grow as more universities see the benefits of these successful partnerships. Most universities face many of the same challenges: reduced support from constrained state budgets, older on-campus housing, and demands on institutional funds for academic and support service initiatives. The modernization of on-campus housing, focused on student retention and success in live-learn communities, represents a significant investment opportunities for EDR, and we are well positioned to win these opportunities. Currently, the number of companies that have the proven on-campus development and management expertise, size, transparency, and financial strength necessary to successfully compete for these university mandates is very, very limited. These requirements are EDR strengths, and they provide a strong barrier to entry in this market. In closing, the collegiate housing industry is performing well, and EDR, due to the execution of our business strategies and best-in-class portfolio of assets, remains positioned to outperform. The opportunities for EDR to create meaningful shareholder value from both internal and external growth prospects are outstanding. We have the team, along with the financial resources, to seize upon industry opportunities to continue growing the company in the years ahead. Now, Chris will discuss property operations.
Thank you, Randy. What a great leasing season. I want to thank the entire sales, leasing, marketing, and management team for such a successful leasing campaign. Our same community portfolio ended the year 200 bps ahead of prior year with